Good evening, ladies and gentlemen. Welcome to our weekly investor forum. I'm your host, Justin Scott, investment banking analyst, and we're happy to bring you to another episode of our investor update series. Joining me today is none other than investment advisor Junior Roberts. Welcome back to the program, Junior.
Great to be here, Justin.
Excellent. So, today we're discussing two dynamic companies, Express Catering Limited and Dolla Financial Services. Now, if you like the content, don't forget to hit like and share on this video. If this is your first time here, then be sure to subscribe and hit the bell to receive all notifications, given that we upload content like this once per week. Also, if you're looking to embark on your first investment journey, you should take that first step with Mayberry Investments. Follow us on social media to learn more about how you can get started today. Now, let's kick things off with ECL. Junior, over to you.
All right, Justin. So for our first-time viewers, ECL operates out of the Montego Bay Sangsters International Airport. All the great offerings in that food court section is owned and operated by ECL. So we're going to jump into the 9 months ending February 29, 2024. We see revenues increasing by 23% to 18.6 million US dollars, up from 2023's 15.1 million US. Cost of sales also went up by 17% from 5.2 million to 6.1 million. We saw a great increase in gross profit of about 26% from 9.8 million in 2023 to 12.4 million in 2024. Total expenses surged by 110%, right, from 4 million to 8.4 million, which resulted in an operating profit of about 12% increase from 3.5 to 4 million dollars. Net profits were increased by 8% to 2 million US dollars from 1.9 million US dollars. We see here earnings per share of 13 cents and a total asset base of 46.28 million. Shareholders' equity stand at 8.13 million. Onto the stock price movement, we see current prices at $3.40, right? A 52-week high of $5.13 and a 52-week low of $3.01. The PE ratio currently stands at 12.37, and the junior market now has an average PE of about 14 times, so the stock is trading a little below average PE ratios. We also see trailing earnings of about 450 million Jamaican dollars. On screen, we have a visual of the arrivals from 2008 to 2023, right? So you see the movements in the traffic through the Sangsters International Airport and the dip that we experienced in the year 2020 to about 2021 and the increase from about 2022. We could see where things leveled off in the last part up to about September of 2023, and we have the expected volumes of about 3.3 million to about 4 million arrivals in 2024. On screen, we're seeing the ECL quarterly profit movements. We're reflecting from about 2022 up to 2024. Highlighted in green would be the Q3 quarterly movements. Q3 would start about December, ending in February. So you could see the movements, and the company has made a great turnaround since the dips in 2021 and 2022, and we're showing steady profits of over $1 million US dollars Q3 of 2023 and Q3 of 2024. On the next slide, we could see steady movements in the stock price. I'll repeat that we did see a year-to-date low of $3.08 and a market high of about $4.48, which means that there is still a lot of room for growth. The stock is trading below market average PE, and with the turnaround in the economy and rates coming down, you could definitely look to add ECL as a part of the portfolio, as we definitely look forward to remarkable gains in the stock over the coming year. Over to you, Justin. Any thoughts on ECL?
All right, thanks for that, Junior. I'm very much interested in seeing how far ECL can push their revenues and profits given their recent expansion over the Sangsters International Airport, combined with the fact that we're getting a whole lot more tourists. Like it's very much a steady growth, and not only that, but we're extracting more dollars out of them. As a matter of fact, a 6.5% increase in the dollars harvested per passenger. So it's good to see that ECL is continuing to gradually press on and push out further, and hopefully we're far beyond the days of significant expenditure and now can be moving on to more significant profits from them. I'd love to see that. So that was ECL, guys. Let's switch gears and get into Dolla Financial Services, of which I myself am taking on. Let's get right into it. Dolla Financial Services, for those who don't know, is a leading microfinancial institution in Jamaica offering accessible and flexible financial solutions to individuals and small businesses. These services include personal and business loans designed to empower clients with quick and efficient funding options, and as of right now are currently operating 11 branches across the island, and I'm sure they have plans to expand further over the next 2 years. So taking a look at their 6 months results ended June 2024, their interest income has increased by 26% from $588 million to $742 million over the period. Interest expense has grown by 20% in line, increasing from $101 million to $121 million. So the net interest income would have resulted in $622 million for the period. But when you factor in other revenues, well, in this case, it would have had a slight little nick in the financials, dropping it down to $612 million. But that's fine because that's still a 22% gain when you compare it over the same period last year. Operating expenses is up 15% to $309 million. Profit before tax is up 31% to $303 million. And after factoring $90 million worth of taxes, that results in a net profit of $284 million, up 25% over that same period. So I'm very much interested in seeing how much Dolla can continue to grow these things. These guys are very aggressive. They're constantly in the markets right now looking for more and more capital. As a matter of fact, right now they're raising a $1 billion bond to further on lend to their clients, as in the ways I just outlined before. So we know that they're really out there. They're really constantly expanding because the only way to grow is to continue and make use of the capital that they have. And with margins like these, they're very much over what is required of them to constantly get that return that we're looking for. Let's take a quick look at the balance sheet. Total assets is up 16% from $2.8 billion to $3.2 billion. Total liabilities is up 11% from $1.9 billion to $2.1 billion. And total equity is up 29% from $897 million to $1.1 billion. So as you can see here, following the close of its Q2 financial period, Dolla has managed to increase its loan portfolio by 22% and its overall assets by 16%. And in addition to that, what's really interesting is the fact that they still have a single-digit non-performing loan portfolio and single digits as well for the expected credit loss provisions, signifying how well Dolla's managed to secure their loans and managed to hedge the risks of this aggressive lending spree that they're on. So it's no surprise that after launching that $1 billion bond, and I should mind you should actually share some of that information with you guys, so, prospective investors can go out there and ask their financial advisors if this is the right thing for them. So they're actually doing it at 12%. It's a secured bond with a 4-year tenor. In addition to that, so those of you keeping track of the rate cuts that have been announced recently over the BOJ, we moved from 7% down to 6.75%, and now as of this week, we're down to 6.5%. So a lot of you guys who are very much interested in bonds and fixed income are wondering, okay, well, when are we going to get to a point where the bond offerings are starting to follow the trend of the interest rates following the central bank? And a lot of you guys will know some of these companies and institutions will even want to refinance the notes that they have out there, to follow that declining trend. It's very interesting for you guys to understand that Dolla, in this particular bond, has decided to protect you guys against a rug pull, essentially, to let them know that they're not planning to refinance this thing at a lower rate anytime soon. So Dolla has decided not to do an early redemption on the bond within the first 12 months and will pay a penalty on the principal amount if it's redeemed before the 3rd anniversary of the bond or before September 27, whichever one is, works out the same. So that way you can be sure of that 12% return for at least 3 years, even if rates fall significantly in the coming months. So, and that to me is just about as attractive as bond offerings come these days. They're ensuring that you guys get exactly what you signed up for. Let's move on to the next slide. As you can see from the quarterly profit movements, it reflects the aggressive borrowing that Dolla has been on right now to lend to further clients of theirs. So taking a look at this year's quarterly profit movements, with Q1 and Q2 being about $140 million on average. This is head and shoulders over the previous quarters where they were doing just over 100 and on the top end maybe $120 million. Now we found a new floor for what we can expect for their quarter profit movement as they continue to expand. And with that new $1 billion in capital that they're seeking to raise, we can expect, continual growth from them. So I'm very much interested in Dollar. And as you can see, the PE, I didn't really focus on it a little bit earlier. With a PE of 17 times, to me, it's not that it's trading rich. It's more of in a case of where this is what the market expects from them. So that's why people are willing to spend around like $3.29, $3.30, and maybe even a little bit more in the very coming future. And the reason for that is a lot of people are very much interested in what future offerings Dollar may provide to them, even as equity holders rather than being bond holders or clients of theirs. So I want to spend a little time speaking about their wholly owned subsidiary, Ultra Finance Limited, which is their specialized lending arm, which deals solely with high net worth individuals and providing asset-backed lending services. Ultra Finance was announced shortly after their June 2022 IPO and quickly increased the size of their loan book to over $1.25 billion as at June against $3 billion in collateral, indicating that their loan book is significantly securitized. To me, they're champions of the asset-backed lending niche, which is growing in size as more Jamaicans are taking advantage of their equity and capital that their assets are able to afford them in this time. So according to Ultra's CEO on the most recent earnings call, the year-to-date income for Ultra is about $285 million by end of June, and the profit before tax is $145 million with over 151 active clients. This is an extremely lean entity, which is a gem of immense clarity, which I'm sure, as all key investors are aware, will be shining brightly on the stock exchange once the spin-off occurs. It's not a matter of if, but a matter of when in my eyes. What we're seeing is almost a 50% profit before tax margin, which is very impressive. Now, let's imagine that when Ultra is ready to list, they come at, say, an 8 times multiple with a roughly annualized figure of around $300 million before taxes. At an 8 times PE listing, that's a $2.4 billion company selling 20% for $480 million. This is barring the increase in the junior stock exchange limits. If we increase it up to $750 million by the time they're ready, then I'm sure they'll be coming at a bit of a richer multiple, but a 50% profit before tax, I'm not arguing with them. So with these multiples and growth potentials, to me, that's an easy buy when that does come around. So what I truly love to see is some benefit out there for existing shareholders. So if the Dollar board members and all the decision makers are seeing this right now, it'd be great to have, for every Dollar share you have, perhaps one share in Ultra or something to that effect. And I guess my last point is it's really impressive how Dollar has been able to champion 2 related entities simultaneously while aggressively growing one another through prudent borrowing and usage of other people's money while maintaining such low levels of non-performance, keeping such high levels of collateral against the loans that they're putting out there, and just ensuring that they're able to keep making these returns that they continue to promise and bring to us as shareholders. Junior, any thoughts on Dollar?
Yeah, Justin, just to echo a couple of thoughts that you brought up. Investors should bear in mind Dollar was just listed a little over 2 years. And to aggressively grow the company books by up to about 3.2 billion in such a short space, it's impressive. The bond that will be issued at 12% is very attractive. It's one of the most attractive secured bonds on the market this year. That presents a great opportunity for investors to really capitalize on their interest earnings and fixed income earnings. And they do champion a great cause in the microfinance sector and run a tight ship with only having a single digit non-performing loan book. So definitely want to have, they still have about 8 years to benefit from the tax incentive. Phenomenal company.
Absolutely, Junior. I couldn't agree more. This is definitely one of my stocks that I'll be holding in a portfolio, and whether I'm be trading it in and out or just holding for the long run, it's all the same to me because I'm expecting great things from Dollar. So thanks for that, Junior. And that's it for today's discussion, ladies and gentlemen. I'd like to thank all of our viewers for tuning in today. Your support is always appreciated, and I would like to thank my co-host, Junior, for contributing to today's discussions.
Another great forum.
Excellent. If you're curious about updates on our virtual investor forum, then you should follow us on our social media. We share our live stream dates and upcoming guests on our official social media pages every week when we're having them. And to keep up with that, just give us a follow. Stay on top of all things forum related. Also, don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click the bell to receive all notifications. Remember, wise investors, slow and steady wins the race.